Hello, I'm Brian Rezny, president of Rezny Wealth Management. We've got a great show for you today. We're going to talk not only a lot about the investment markets, but also how to avoid bad advice. Unfortunately, I see too many investors, especially pre-retirees and retirees, taken to the woodshed by a so-called advisor, somebody with a fancy title, a wealth manager. These are all just kind of bogus titles that all of these big Wall Street firms utilize, or these annuity people, in order to think that they actually do more than they do, is the bottom line. Remember, the only kind of firm you should ever entrust your money to is a fee-only fiduciary firm. Fee-only. Fee-based is not fee-only. Somebody who claims they're a fiduciary office, that's smoke and mirrors too, folks. Always get it in writing. Fee-only fiduciary on their letterhead. If they won't sign off on it, that means they're going to sell you something that you should not be sold, that's going to have a big impact on the negative way on your portfolio. Investors put up with mediocre advice for way too long, and it costs you a fortune. I've managed money for over 30 years professionally. I will tell you, we get people in our office constantly that were sold the crummy equity index annuity, either through the annuity charlatans out there or through some brokerage firm or bank. We get people every single day that come into our offices that were sold the non-traded real estate investment trust and they can't get out, or the mediocre mutual funds with high cost, or the crummy variable annuity, or the direct participation program. All these investments that are created by Wall Street firms and insurance companies to line their pockets more than yours. Remember, when you're working with any Wall Street type firm or bank or insurance company, none of these firms are fee-only fiduciaries. So what that means is they don't legally work in your best interest 100% of the time, and it's going to cost you a lot, not only in added expenses, but in our opinion, in worse returns and more added risk to your portfolio. Conflicts in being sold inferior investments will rob your returns, and it will ultimately rob your retirement. Just recently, I had somebody that we talked to that hired my firm. They were sold two big, giant equity index annuities for $1 million each. They thought they were going to get a free money bonus. They thought, and were told, they were going to make 8% returns. Blatant lies and factually not true. There was their money, and after 2 years of reviewing the annuities they were sold, they actually averaged about 1.25% a year when the market did quite well. So the bottom line is this: annuities are garbage, but annuities aren't the only inferior crummy investment that is sold to you unsuspecting investors. There's all kinds of these investments. Remember, anything that has a commission, a back-end load that locks your money up, that doesn't give you freedom and flexibility, should never be in your portfolio. Procrastinating is going to cost you also. It's going to cost you your wealth and your financial security. Unfortunately, we're all busy. Unfortunately, a lot of investors realize, hey, my portfolio is not really doing that great. Brian Rezny brings up a lot of great points year after year on his TV and his radio show. I've listened to him for years. I hear this all the time. And I always ask people, why didn't you call us years ago? I procrastinated. Procrastination is going to cost you a fortune. When you sense there is a problem, when you're realizing you finally have learned something from our show that makes sense and what you're currently doing does not make sense, it's time to get a second opinion and protect your wealth from bad advice. Hire a real advisory firm to manage your wealth, not a salesman. Again, the only kind of firm you should entrust your money to is a fee-only fiduciary money management firm. Fee-based is not fee-only. Not one Wall Street firm, bank, or insurance company is a fee-only firm. They all work under some form of suitability. Some might do fee-based, which again is not fee-only, so conflicts of interest are prevalent and added cost in that relationship. Make sure you get a real firm to manage your wealth, because anything less is really a sales organization. Why would you ever entrust your money to a firm that doesn't work in your legal best interest 100% of the time? Never settle. Never put up with conflicts from a so-called advisor. I often hear from new clients that hire my firm, but it's my cousin Bob, and he used to be a pastor. He works at the big brokerage firm. He wouldn't take advantage of us, would he? It's not Bob, your brother-in-law or your cousin or best friend from college. It's the company Bob works for. That bad umbrella called Wall Street banks and insurance companies, their job is to milk you for every expense they can at the detriment of your portfolio and financial security. If you don't think that's the case, do a little research on the investments you own. Why is it you always underperform typically the market or the bond market? Why? Added expense and crummy investments. Ultimately, you, the investor, have to take some charge. Realize the only kind of firm you should entrust your money to is a fee-only fiduciary money manager. Never a Wall Street firm, bank, or insurance company unless you believe in advice that is not 100% in your legal best interest and you believe in spending a lot of money and extra cost and conflicts that will take away from your return and your financial security. I'm going to go take a quick break. I'm going to come back with questions from our listeners. So as always, go to ReznyWealth.com, ReznyWealth.com, and send your questions to Brian Rezny at ReznyWealth.com. I'll be right back after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. I've managed money professionally for over 30 years. The biggest mistake I see investors make, being sold an annuity. Annuities are sold on blatant lies, fake free money bonuses that never materialize for you, the consumer. Before your retirement gets ripped off by an annuity salesman, get my free report, Why Annuities Are Dangerous to Your Wealth and Retirement. And we're back. Of course, we're taking your questions. Send them to Brian Rezny at ReznyWealth.com. And we also have a couple workshops coming up. For those of you who want to get educated, for those of you who are pre-retires, retirees, if you have a $500,000 portfolio and larger, you should attend one of our upcoming workshops. I have one in Naples and one in Fort Myers. I will be discussing the disturbing facts most investors are shocked to learn, the true cause of poor investment returns, and how to fix it. Do not let a annuity charlatan take advantage of you. Do not let a Wall Street firm take advantage of you. Don't let the bank try and sell you bank products. Make sure you protect your wealth. If you want to learn more about investing, how to protect your wealth from bad advice, go to ReznyWealth.com, click on our workshop tab for times and availability, and to sign up. Chris from Port Charlotte, Florida. I enjoyed watching your report every Saturday, but was wondering how you've never mentioned Bitcoin. Chris, great question. I've actually had a number of questions on Bitcoin over the years. Bitcoin is a cryptocurrency for those of you who don't understand it. I would avoid Bitcoin at all costs. Bitcoin is a speculation trade. I remember back in January of 2018, on my live radio show on Sunday mornings, I started receiving dozens and dozens of calls per show about Bitcoin. Questions were, hey, what do you think about Bitcoin? Bitcoin's up 8,000% last year. Should we invest in Bitcoin? Whenever I start getting a lot of calls and questions on a specific investment that's already performed crazy returns, which are unrealistic, I know this is probably a bubble. Of course, what happened after all those calls, the next couple months, Bitcoin cratered 60 to 80% down in value. So again, if you're chasing a speculation type investment, you're gonna lose your shirt. You should never speculate with your money. You should never buy something that can go to zero. Now, you may buy investments that will fluctuate in value. That's fine. But do not buy anything that can go to zero. I do not like Bitcoin as an investment, and if you buy it, you're taking a big risk, and in my opinion, for little to no ultimate reward. Maurice from Fort Myers, Florida. What do you think about tax-exempt bond ETFs? An ETF, folks, is an exchange-traded fund. Maurice, I actually like tax-exempt bond ETFs if they're appropriate based upon interest rates. Now remember, ETFs that own bonds go up and down with interest rates. So if interest rates go up, bond values come down. Just remember that. Rates are extremely low. If you go buy any kind of bond or bond investment, make sure it's on short short-term duration. What does that mean? The maturity level of the bonds that are owned within that ETF or the bond you buy individually or that bond mutual fund, keep it under 5 years and probably more like 3 years today. Now, a lot of investors will go further out on the maturity scale on bonds to get a little bit more interest. That's a big mistake because remember, rates are dirt cheap. Do not lock money up for dirt cheap interest rates. Because again, if rates do move up a little bit, if we have an improving economy and the Fed raises rates, your bond values are going to drop and could drop a lot. Bonds can be as risky as the equity market from time. So don't think bonds are safe. They can be as risky and volatile at times as the stock market. William from Cape Coral, Florida. Knowing mortgage rates are now 3 3/4 to 4%, and market investments say are between 7 and 10%, does it make sense to apply for a mortgage 225 and use that dead money in our investment portfolio? William, absolutely no. It is illegal, first off, for an investment person to tell you to mortgage your home to then invest those proceeds. So it's actually illegal. So if you're getting that advice from your so-called advisor to take a mortgage on your home and then invest that in investments, that is actually illegal, and that person is basically telling you something that you should not do first off, and legally they can't tell you to do that. So don't do that. That is a huge mistake. I've seen this come up from time to time. Often what happens is it's a lot of these annuity people that will convince you to go take a mortgage on your home, buy some annuity, and basically you'll basically lose money. You're going to make less on the annuity, you're paid more on the interest on the mortgage, but again, this is an illegal transaction. Do not do it. You'd be making a huge mistake. I've got 2 upcoming workshops, folks. We often get calls, Brian, when are you going to do another speaking engagement? This is your chance. And in fact, we're not going to have a lot more of these throughout the year. So we've got 2 coming up, 1 in Naples, 1 in Fort Myers. The disturbing facts most investors are shocked to learn. How investors get ripped off by Wall Street firms, banks, and annuity charlatans. If you don't want to be ripped off by a Wall Street firm, bank, or annuity charlatan, attend my upcoming workshop. We're going to talk about the disturbing facts most people are shocked to learn, the true cause of poor investment returns, and how to fix it. Go to ReznyWealth.com. That's ReznyWealth.com. Click on the workshop tab. Our workshops are great for pre-retirees and retirees who have a $500,000 portfolio and greater. If you want to learn, if you want to protect your wealth, if you'd like to meet me in person, if you're one of those people that is saying right now, Brian, I procrastinated too long, it's time I look out for my wealth, attend one of my workshops. Sign up today. Seating is always limited. You'll be glad you did. Barb in Naples, Florida. Brian, as much as iShares ETF have lost value since I purchased, should I buy more at a lower price or ditch it? Barb, I'm not sure when you bought IJR, which is a small cap ETF that owns small cap stocks, approximately 600. Just because you bought it, let's say you bought it 3 months ago and it's down a little bit, why did you buy it in the first place? I actually like small cap stocks in the US, and I'll tell you why. Large cap stocks are fairly valued and some are overvalued. Not that you shouldn't own some of them, but small caps, in my opinion, have a greater opportunity. To me, they are fairly valued and some are undervalued. So what's happened in the last year or so, small cap, while it's done well long term, has underperformed in the last couple of years large cap. So what do investors do? They want to go and chase, of course, large cap, instead of maybe reallocating that portfolio to better opportunities. I actually like small cap. What I would say to you, if your investment strategy dictates that you can hold more small cap, I would definitely be looking to add to that, but make sure your allocation is proper, how much you're going to put in small cap, and make sure it fits into your investment strategy. But we actually like that space overall. Folks, I'm going to take a quick break. Go to ReznyWealth.com. We've got groundbreaking investment reports that are free for all of our TV listeners today. If you go to ReznyWealth.com, scroll down to the bottom of our website, download any of our groundbreaking reports or check out our workshop tab. come and attend one of our workshops. We like to help investors protect their wealth from bad advice. Go to ReznyWealth.com. I'll be right back after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. Investors are getting smart. They are moving away from conflicts, bad advice, and being sold junk investments from firms that are not fee-only fiduciaries. Smart investors demand real advice and real money management 100% of the time. If you're tired of the financial runaround, download my groundbreaking report, 3 investment risks you must avoid now. And we're back. We're taking your calls, of course, or your questions. You can send those to Brian Rezny at ReznyWealth.com. We want to hear from our TV listeners. What questions do you have? Maybe investments you own. Maybe you're worried about the economy. Maybe you're just worried about a possible recession and a big dip in the overall economy, maybe the stock market. Maybe the advice you're getting doesn't seem like real advice. Maybe, unfortunately, you've been sold one of these crummy annuities by the annuity charlatans out there. Send us your questions. Brian Rezny at ReznyWealth.com. I'll do my best to answer those on our TV show. And as always, visit ReznyWealth.com. Download any of our groundbreaking reports and make sure you do sign up for one of our upcoming workshops. We do manage larger portfolios, $500,000 and larger. So if you're realizing maybe it's time that you talk to my firm about managing your wealth, go to ReznyWealth.com, click on our consultation page, and you can basically request a consultation with my firm. Rich from Port Charlotte, Florida. I am the 4th year into a 7-year annuity. What can I do to get out without losing money? Rich, the first thing is you should have never bought an annuity. There is 0 reason why an investor should ever buy an annuity. 0. If you're an ultra-conservative, emotional investor who never wants to lose money, then go to the bank and buy a laddered CD approach for 1 and 2 years. CDs, in general, are going to pay you equally as well, maybe better, than most of these crummy annuities that are sold to you, the investor. The big difference is when you buy a CD, you have liquidity. You can get out when you want to without a 10, 12, 14% surrender penalty. Annuities are plain and garbage. So if you bought a 7-year annuity, you still have penalties. There's no way to get out of that. What you could do is you can bleed out 10% penalty-free until you're past surrender at that point. You can get rid of the rest of it and you can look for greener pastures. But ultimately, I would suggest every one of our TV listeners today, go to ReznyWealth.com, download our free report, Why Annuities Are Dangerous to Your Wealth and Retirement. Read it. A lot of you are looking at purchasing an annuity. A lot of you are trying to be sold right now by the annuity charlatan a couple big insurance policies for your retirement. These are garbage. You are led down the wrong path. If you buy an annuity or you buy an insurance policy as an investment, you are making the single biggest financial mistake of your life. I cannot stress that enough. But unfortunately, what we find is this. You buy one of these annuities or these insurance policies, again from the annuity charlatans. It takes you about 3 to 4 years of being in these things to realize you were taken to the woodshed. You start to get angry. Now you're looking for real advice. Before you get yourself in a bad situation, do not talk to anybody who sells an annuity. If they're not a fee-only fiduciary money manager, then it's somebody you should never discuss. Anybody who sells an annuity is not an advisor at all. They're a salesperson looking to line their pockets the most, which is detrimental to your security and your retirement. I've got 2 upcoming workshops for those of you that want to learn more. The disturbing facts most people are shocked to learn. The true cause of poor investor returns and how to fix it. How investors get ripped off every day by Wall Street firms, banks, and these annuity charlatans. I'm going to teach you how to protect your wealth from bad advice. If you'd like to attend either workshop, Naples or Fort Myers, go to ReznyWealth.com. That's ReznyWealth.com. Click on the workshop tab. Our workshops are appropriate for pre-retirees and retirees. If you've got a $500,000 portfolio and greater, you should attend our workshops. That's who this is designed for specifically. The education you will learn at our workshops will take you light years ahead of where you've ever been financially before. You'll learn the mistakes to avoid. You'll learn how not to be taken advantage of by your Wall Street broker or the annuity guy. You'll be better protected for a future retirement that can be rosy for you versus your broker. That's the bottom line. Go to ReznyWealth.com. You will be glad you did. Robert from Punta Gorda, Florida. I contribute to a 401k plan through work. I have a Roth IRA. Each is in a mutual fund type fund. How can I protect myself from the next market crash? Robert, it's called risk management. Let me explain. Most investors look at their account depending on how it's invested. It may have some bond mutual funds, some stocks, some mutual funds in general. Maybe it's got some cash in there, whatever. So every investment's going to do some of this. Depending on your risk level, you might have more of this for a better opportunity for a better return. You might have less of this, so meaning you're going to make a lesser return opportunity. So what I'm going to tell you is this. This kind of intra-year volatility, there's really nothing you can do about to save yourself from that. What you should be concerned about, and most investors have no strategy for this, is risk management for the next recession. What that means is this. Normal market cycles, normal economy. We could have a 5, 6, 10, 15, 20-year cycle where the equity market kind of meanders up and down and has a pretty good, decent average. Then all of a sudden the economy gets overheated. When the economy gets overheated, that often leads to high inflation, the Fed raises rates, and ultimately you have a recession. When that happens, that's when equity prices come down a lot. So when you see an overheated economy, it's called research. When you see an overheated economy, again, it's called research. Unemployment's going down, things of that nature. You need to have a strategy that includes research. If you can't do that, hire a firm that looks at the economy, has a risk management strategy. Ultimately, when you see economy starting to roll over, get a little more defensive. Hedge your portfolio with inverse ETFs, raise cash, add treasuries, things of that nature. Most individuals are not capable of doing that because they don't have the time, discipline, or talent. If you don't, call a firm that can actually properly manage the risk in your portfolio. We'd love to talk to you about managing your wealth if your portfolio is $500,000 and greater. Byron from Fort Myers Beach, Florida. For the last several years, oil energy stocks have really had no growth in general. I sold some of my large oil names years ago, but I still own 2 energy ETFs, thinking the time will come for their return. Would you continue to hold these for the future? What I will tell you, this is Byron, is simple. We are energy independent in the U.S. Oil prices are no longer skyrocketing when we have conflicts, let's say, in the Middle East. Global problems are no longer our problems when it comes to oil prices. So what I will say is this, and I've talked about this for over 4 years. I would not own energy stocks in general. A lot of these oil stocks, like the Exxons of the world, or pure sector plays for the long term on oil, make 0 sense to me. The growth potential is not there. There's greener pastures for your money. If you own a lot of energy type investments, I would be a seller of those and I would look for a more diversified portfolio. Energy is not what it used to be. It's going to be cheap, which is good because, again, we're producing more than the rest of the world. We're net exporters. These are all good things for the U.S. citizen, but not good for your portfolio. Dump oil-related investments, in our opinion. There's much greener pastures where you can put your money. Clark from Naples, Florida. I just started investing. I'm just out of college, and my aunt left me AT&T stock. What do you think of this stock? Garbage. I would not touch AT&T with a 10-foot pole, and I would sell it immediately. You're clearly a younger person just out of college. Look for growth. AT&T, while it's a great company, the heyday of AT&T ended well over 10 or 15 years ago. The stock's got a big dividend. That's why people buy it. They're attracted by the big dividend. But the total return of AT&T is mediocre at best. You would have been much better off investing in the S&P 500 index than owning AT&T. You would have had less volatility and realistically a better overall return. So what I would say is this: dump AT&T, invest your portfolio with growth type investments. Often, growth investments, meaning investments that are growing earnings and sales at a faster clip than the average in the marketplace, are great opportunities. AT&T is not doing that. On my last caller about energy, Exxon's another one of those. There's a lot of good companies, but that does not make them good investments. The biggest problem I think investors often face once they buy an investment is really when to sell the investment. Because most investors buy investments because they heard the name. Oh, I know that stock. It's XYZ. I'm going to buy it. So they buy the stock. And then all of a sudden the stock starts going down in value. But they never really knew why they bought the stock in the first place because they never did any research. So when it comes time to sell because the stock's going down in value, you get paralyzed and you essentially do nothing. So what I will say is this. Make sure that the advice you're getting is always proper. And what I will tell you is when you're looking at individual stocks, they require a lot of time and discipline. The average investor thinks individual stocks will make you more money. In our opinion, you'll get more volatility and probably a much lesser return, especially if you're self-managing those individual stocks. The other thing that I often see from new clients that hire our firm every month is they will come from one of the big brokerage houses. They'll have a fee-based account, which again is not fee only, and it'll have 40 or 50 individual stocks in there. Probably a lot of our listeners have a portfolio like that. Your returns have been lousy, meaning you've taken the risk or more risk than the stock market, but you've made a lot less return. That's what we see all the time. Because again, your brokerage firm is not a good stock picker and owning 40 or 50 stocks is not diversified enough. So more volatility for lesser return. Folks, look at your brokerage statement. Do you have a bunch of individual stocks? How have you really done? What's the return? How's it performed? What's the volatility? I'll probably can almost guarantee you've underperformed the market and you've taken a lot more volatility to do so. Not a good mixture. We've got 2 workshops coming up, Fort Myers, Naples. Go to our website, reznywealth.com. That's reznywealth.com. The disturbing facts most investors are shocked to learn. How investors get ripped off by Wall Street firms, banks, and annuity charlatans. Don't let that be your retirement. Learn how to protect your wealth from bad advice. If you've got a portfolio of $500,000 and greater, you want to learn to avoid the mistakes that too often plague a lot of people, especially retirees. Make sure you attend one of our workshops. Go to reznywealth.com, click on that workshop tab. It has times, availability, and to sign up. And as always, if you're concerned about the advice you're currently receiving, make sure that you call our office for a consultation. We are a fee-only fiduciary. We manage larger portfolios, $500,000 and up. If you are unhappy with the way your money's being managed, if I brought up a lot of red flags on my show today and you're realizing your advisor is no advisor at all and you want real advice, real money management 100% of the time, call Rezny Wealth Management. We're locally owned right here in Naples and in Fort Myers. We'd love to see you. We'd love to get your portfolio back on track. We'd love to give you the advice that you truly deserve from a fee-only fiduciary firm with over 30 years of experience. Make sure you have yourself a safe and profitable day and visit our website, reznywealth.com.